best.
Oh, one more.
All right, you're good to go.
Good morning. My name's Saul Scrocki, and I'm from Fleischer Jacobs Group, and I'm the Director of Group Benefits there. We're right up the street at Kennedy Road in Heinsberg, so we're here in your backyard and available to you to help you through the healthcare process. I'm here today to talk about the medical plan options, and my colleague Ben will talk about your voluntary benefit offering that it will begin in January 1. Both coverages will begin January 1. So I've been working with Mohammed and Avi to put together a program that would meet hopefully everyone's needs. And we're going to offer two health insurance plans. One is called a Gold's Blue Reward Plan. Both of these are through the Vermont Health Exchange. That plan is intended to have a lower deductible, lower out-of-pocket expenses, but a little bit higher premium. Conversely, we're offering a plan that has more out-of-pocket expenses and a higher deductible, but lower premiums. So hopefully that will meet everyone's needs. And I'll briefly review these two medical plan options for you today, and then certainly will be available to each and every one of you if you have questions or specific needs that you want to review with me. If you open your folders that you have in front of you, this is the summary that I'll be going over today. So that should be the first document on the right-hand side of your folder. And as I mentioned, this is called the Open Enrollment Summary. And so, as I mentioned, we've got two plan offerings that are available to you and your family. One, again, is the Blue Gold Rewards Plan. That's Plan 19 on your left-hand column. And that plan has a $2,500 deductible for an individual and a $5,000 deductible for a family. The coverage pays 100% after you've met the deductible. Okay, so the deductible and your out-of-pocket expenses are one and the same. Very simple plan. Once you've met them, the plan pays 100%. So you no longer have any out-of-pocket expenses. A couple of notes on this plan. It typically just you're responsible for 100% of the cost. Now, each provider has a negotiated rate, so you will pay the discounted amount based on Blue Cross's discount that they've set up with the different providers. So you always want to make sure that the claims are adjudicated before you pay anything. But you would be responsible for 100% of the cost until you meet the deductible. The only exception to that is for prescription drugs. And prescription drugs are covered a little bit differently. And I have a list of what is called wellness drugs in your folder. I believe it's the last document. Let's see how it's titled.
Prescription drug plan.
Prescription drug plan. So those are what we call wellness drugs, and those are covered a little bit differently. So I'll talk about the regular drugs first. Regular drugs are covered at 100% after you meet the deductible. So you do need to meet the deductible. You'll be paying 100% of the cost of your prescriptions. The only caveat to that is if you meet $1,300 in prescription drugs, there is a Vermont state mandate that is built into this plan that will protect you above and beyond that. So technically, if your prescription drugs, bless you, Abby, if your prescription drugs meet $1,300 for a single or $2,600 for a family, you would no longer have any more out-of-pocket expenses for prescription drugs. Okay? And if your prescription falls on the wellness drug list that's in front of you, they would be covered prior to deductible at $5 for a generic, 40% for a preferred brand, and 60% for a non-preferred brand. And that information isn't on the summary here, but it is listed in your folder in what we call a summary of benefit coverage. Each one of you will receive a summary of benefit coverage as you review these plans. So that specific information is detailed in the summary of benefit coverage. In ingest, that's exactly how that gold plan will work. It's again intended to be a very simple plan. You're responsible for 100% till you meet the deductible. Everything else will be covered after you meet that. Yes, Marcia?
The prescription drug, these, how much does it pay for these?
So those are, again, prior to the deductible, so you don't have to meet the deductible. Under those, there's a first dollar benefit at $5 for a generic, 40% for a preferred brand, or 60% for a non-preferred brand.
Thank you.
And again, that information is in the summary that's got a little bit more detail on the plan, okay?
So you're saying if, let's just say, a prescription costs $175, you paying that $175?
Yep, well, it would go through the adjudication process, so typically there's a discount associated with the prescription, excuse me. So, you know, you would pay that discounted amount, so the allowed, they call it an allowed amount. So of that 175, we'll just assume, you know, 150 of it was the discounted cost, you would be responsible for that. Yeah,
Is there more to this list, or is this it?
that's it.
Wow.
So, any questions on the gold plan before I move kind of into the second offer in terms of health insurance? No? Okay. So the bronze plan, as I mentioned, this plan is intended, yes, Mohammed?
I think there should be more because Saul, this is only page 3 and 4.
Are we missing
So we're
one?
missing
Okay.
1 and 2.
All right,
Oh, I have 1 and 2, but not 3 and 4.
Me too.
there you go. Ben is handing out the rest of it. Thanks, Ben. We'll get that to you as well. Apologize. I knew it printed front and back. I didn't know exactly how long the list was, but we'll make sure you guys have that. So the bronze standard plan, that's the plan on your far right-hand column of your summary document. And that's going to be the second option available to you. And as I mentioned, it has a higher deductibles, works a little bit differently, but does give you some rate relief. It has lower premiums. And I'll go through the plan design first, and then we can kind of discuss some of the details. So for an individual on the bronze plan, there's a $4,100 deductible, okay? Once you reach that deductible, there's what we call 50% coinsurance. So you're responsible for 50% of the claims until you meet the out-of-pocket maximum. And the out-of-pocket maximum on the bronze plan is $6,500. So from $4,100 to $6,500, you're responsible for 50% of those claims. And after $6,500, the plan will pay the remainder, so you have no more out-of-pocket expenses. Okay? And for a family, it's $8,200 for the deductible and $13,000 for the out-of-pocket maximum. So again, when you're thinking about this, you want to think about your utilization, how much you're using the plan, and then kind of determine what's a better plan offering for you based on the premium. This will give you a little premium relief. It'll lower your cost on a monthly basis, but if you use the plan, it'll be more expensive than the gold plan. One important note on both of these plans, the preventative care is covered at 100% by the plan. So even if you're on this higher deductible plan, you want to do your annual physical, or for women, mammograms, things like that, child care screenings, those are all covered at 100% by the plan. Even if you're on the bronze plan, that's extremely high deductible. So that's an important thing to note. I've included in your packet some information on preventative care and what you should be considering in terms of preventative care utilization. So that is also included in the packet that you have in front of you. The prescription drugs work similarly to the gold plan. There is the wellness prescription drugs that are paid at first dollar. So you'd be responsible for $12 for a generic, 40% for a preferred brand, and 60% for a non-preferred brand. If it is not a wellness drug, you'd be responsible for 100% of the cost until you reach that prescription drug out-of-pocket maximum, which is the same as it is for the gold plan, $1,300 for a single or $2,600 for a family. Okay? So I know I went through that really quickly, but are there any questions that you have in terms of how these plans will work? And again, you do have a detailed plan summary in your packet. Any questions on that? Anything that doesn't make sense?
If somebody has Medicare,
Yes.
how does that work with say Plan 19?
So they're on Medicare currently.
Yes.
We would have to talk to Avi and Mohammed in terms of the size of the population, because it impacts groups differently on that, but I certainly could follow up with you on that. I mean, Marcia, you actually made a good point in before we turned on the camera and started this presentation and asked about preventative. Actually, you asked about pre-existing conditions, or can my husband or me get into a plan if we have something medically going on or something that we've had in the past. And both of these plans, and any plan that's in the exchange, this is part of the Affordable Care Act, no pre-existing conditions can prevent you from enrolling into a plan or cause you to have higher costs in your health insurance. So just wanted to get that information to the rest of the folks that might be interested in that. So if you don't have any other further questions, I want to turn this over to Ben, my colleague here, who's going to talk about voluntary benefits. We're moving from your current AFLAC offering to different products that are similar, but I think you'll find favorable in terms of the cost to the employee, to you. So Ben?
Thank you, Saul. My name is Ben from Combined Services, and we're here to present voluntary benefits. Voluntary benefits are benefits that you pay for out of your paycheck. Many of them can come out on a pre-tax basis, which saves you on the premium. And we also are able to offer you guaranteed issue coverage when you're first eligible. Guaranteed issue coverage is really key because regardless of your health history, we're able to provide you coverage with no health questions asked when you're first eligible. So you're all eligible now because it's the initial enrollment. And for new hires that are coming aboard TLC, you will be eligible after your probationary period. So this is your one time to sign up for guaranteed issue coverage. Please note that after your initial eligibility period, guaranteed issue coverage is no longer available. Therefore, you would have to answer a health question. If you've had any adverse health history and you miss your eligibility, there's a chance you could get denied coverage. So really this window is key for everyone at this initial enrollment, and especially for new hires coming on board after your probationary period. So we're going to walk through the customized benefit summary. Each and every one of you have one of these before you, and we're going to be handing them out to new hires when you're first eligible, when you're watching this video. So the first benefit that we put on the summary is short-term disability. And short-term disability is really your first line of defense after major medical because it protects your paycheck. And you think about how could you go through 6 months without a paycheck? We all have families to support, rent, mortgage, putting food on the table. This is where short-term disability is key, and I think it's really a fundamental benefit for everyone to look at. This is a guaranteed issue offering, so you can come on board with no health questions at all, and we have the lowest elimination period. Now, elimination period is really a fancy term for a waiting period. It's the time you have to wait as the benefit, as the disability starts before the benefit actually starts. There's a first day accident benefit. So if you encounter an accident off the job, this is non-occupational coverage, keep that in mind. That's what short-term disability does. First day accident protection. So you begin receiving benefits day one. Now keep in mind it takes about a week to go through the claim process. So you're not going to get a check right after you encounter an accident. We have to file the claim. However, we'll retroact the payment and you'll receive it from the date of disability. There's a 1 week elimination period for illness. That's the industry minimum, the lowest that we can get. So from your date of disability, you have to wait 1 week before you begin receiving your benefits. And that's the lowest waiting period there is in the industry. So you can use vacation time, PTO, whatever you have saved up during that elimination period to get through, and then your benefits kick in. And again, the benefits last for 26 weeks. Now, a huge benefit we have from the prior carrier that was offering short-term disability is we have one simple plan design. First day accident, 1 week waiting period for illness, 26-week benefit duration. Whereas before, you had reps selling you multiple plan designs, and some of them were not favorable. I saw some waiting periods 2 weeks, some 1 month, and I also saw some benefit durations that were only 13 weeks. That's not enough to cut it. So what we've done is we've extended your benefits and we've lowered your premium. Everyone has the premium and the benefit amount calculated right on your sheet. So you know exactly how much it costs before we ask you to make a buying decision. We feel that these benefits are family decisions. So I encourage you to take the summaries home, go through it with your spouses or your family and see if it's a good fit for you. We never want anyone to be pressured to buy a benefit. We want this to be a good fit for you.
Can I ask one question?
Of course.
How does maternity leave fit into that?
Wonderful question, and I'm sure that's going to be relevant to many folks here at TLC. Full maternity benefits are covered, and one of the best features of this plan versus the prior plan we had is the prior plan had maternity exclusions. So there was actually a 12-month giving birth exclusion in the prior plan, regardless if you were diagnosed with a pregnancy upon the policy inception. So here's how the plan works. As long as you're not pregnant when you enroll in the coverage, you're covered.
So it's considered an illness, so there's the 8-day waiting period?
Pregnancy in the insurance industry is not considered an accident, it's actually considered an illness, yes. And that's a very common question. So yes, there is an 8-day elimination period. Now, what is?
And then is it six weeks and 8 weeks is the maximum amount of time they'll pay the benefits?
Very good, very good. So it's a defined benefit for maternity. 6 week is for a normal pregnancy. If it's a C-section, it's an 8-week defined benefit. So you'd have to wait 1 week before you begin receiving your benefit, and then typically, we just send you one lump sum check for the entire maternity that you're out. So that's really, really beneficial. Now, maternity is really one of the unique situations in insurance where you can look at the premium and know that you're gonna get out more than what you're paying in. You can see exactly what you're paying, know exactly how long you're gonna be out, and say, I'm gonna make money off this plan. So I'd encourage anyone who's family planning to utilize the short-term disability. But don't wait. You have to sign up before you're diagnosed with the pregnancy. That's a key component here. Unfortunately, you cannot call me up once you've been diagnosed with the pregnancy because that would fall into the pre-existing condition limitation. And that's a good segue into this pre-existing condition limitation. All voluntary short-term disability has this exclusion, and this is the only exclusion in this policy. What that means is anything you've been diagnosed with 12 months before the coverage date, you can't go out on claim for 12 months following the coverage date. So a classic example is diabetes. We have a lot of clients that sign up for these benefits that have diabetes. They could go out for diabetes-related complications 12 months after the coverage effective date. Let's say it's 14 months after they bought the policy. However, during that first 12 months, they cannot go out for diabetes-related complications. So that's one key point here. Now, if you had coverage through AFLAC, and if you've had that coverage for more than a year, we're gonna waive that pre-existing condition limitation. So this is gonna affect you folks here at the initial group enrollment that we have, not necessarily for new hires because you wouldn't have been exposed to the AFLAC coverage, but for you folks that had AFLAC prior on the short-term disability, we're gonna waive that pre-existing condition limitation. The reason why is we don't want there to be any disadvantage for you moving over to the new group plan. Because Mohammed had me do exhaustive case studies and we found that in every example, it was less money than what was currently offered from your prior carrier. So we're really saving you money here.
I have a quick question.
Yes.
How does this fit in, say like I'm planning on having surgery next month.
Mm-hmm.
Planning on being out of work for at least a week. Is that something that would qualify for this?
Well, since you'd only be out for a week, you probably wouldn't be able to utilize too many benefits because there is a 1-week elimination period.
Yeah, unless something, heaven forbid, happens.
Correct.
Yeah.
Yeah, correct. Heaven forbid something happens and you're out longer, that's when you'd be able to utilize this
Okay.
benefit. Yep. But a surgery falls under the illness category. It's usually related to an illness.
Just curious.
Yeah, no, really good question. One other key point on this versus the prior carrier is there's a waiver of premium. What that means is you don't pay your premium while you're out on disability. Okay, so the prior carrier did not have that feature. How can you charge premium while you're out on disability? I mean, that just doesn't seem fair. So we waived that premium for you while you're on disability. Question?
This also covers a pre-existing condition for, like, my spouse, if I bring him on board with this?
Spouses aren't eligible for short-term disability.
Okay,
Spouses are eligible for the other plans that I'm gonna review with you, but as a rule, spouses aren't eligible for short-term.
Short-term.
Yep.
okay.
Other questions about short-term disability before we move on? Okay, the next benefit that we're offering is the vision plan. You had a vision plan through your prior carrier. We've brought in a more affordable option for you. It's a group option. I'm not gonna spend a ton of time on the vision benefit. We will hand out benefit summaries. Vision insurance is really like a prepaid expense, so I would only advise you use it if you know you're gonna get glasses. That's when you wanna use your vision insurance. And Saul, are there vision benefits for eye exams in the medical plan?
There's a vision exam
Yeah.
at a copay level.
Okay,
Yes.
okay, so I mean, that is one of the features that you get with the vision insurance here. We have the iMed network, which is the largest network in America. So you won't have any issues, finding the right doctor. But I just wanna urge you, you're looking at a frames benefit here, and if you don't have glasses or contacts, you can use it for either contacts or frames, not both. If you don't need frames or contacts, vision insurance usually isn't the best fit for you, but if you do, you can usually do a simple cost basis and figure out that it makes sense to have the plan. Do you guys have any questions about how the vision insurance works? Yeah.
If you have a condition and you're taking a drug
Mhm.
and it affects your eyesight down the road,
Mhm.
will that be covered?
No, that doesn't really fall into the, perhaps I'm not understanding the question.
My husband has rheumatoid arthritis.
Okay.
And he takes a medication that eventually will affect his eyes. He has trouble with his retinas
Okay.
because of high blood pressure. Would that be covered? Any of,
In terms of his treatment
in
for
terms
that?
of treatment or eye exams?
Yeah, well, you would have eye exams covered, but that sounds like it would fall more under the major medical.
Yeah.
Okay.
Yeah.
That, I would think of the vision plan that Ben's offering as more of discounted pricing towards frames, lenses,
Okay.
things like that. Anything that sort of the diagnosis you're talking about would really fall into the medical plan.
Okay.
Good question. I'm gonna move on to the accident plan. And the accident plan is really one of the most popular benefits. And the reason why is it's extremely affordable and it has significant deductible protection. Meaning it pays you cash benefits that can really help offset out-of-pocket exposure that you have from your deductible. Now, we've given everybody an illustration here, and this will go out to new hires as well. And I think this illustration really highlights how the accident plan works. So as you can see here, Jill took a tumble. She suffered a broken ankle, and what we've done is we've calculated, this is your plan design here at TLC. And you can go right down the list and see what she got covered. So she had an ambulance benefit, the emergency room benefit is here. I want to urge you that this also works for urgent care, which I'm sure Sal would recommend urgent care rather than going to the ER in terms of cost. Yep.
Absolutely.
Yep, so that's one of the key differences between this plan and the prior plan. You can go to urgent care or even go to your doctor. Let's say you slip and fall and you just want to make an appointment. As long as you go to your doctor within 96 hours, you can get that benefit just going to see your PCP, which that would probably be even better in terms of medical cost exposure. As you can see, Jill had a CT scan. She was admitted to the hospital. Open reduction, that means she had a surgical medical condition here that required surgery. There's also a closed reduction benefit if it doesn't require surgery. And as you can see, she had 6 follow-up PT visits. So her indemnity was about $3,500. And when you look at your deductible, this becomes a really good fit in terms of helping protect you from that out-of-pocket exposure.
Yeah. And I would just add that you might want to consider an accident type of plan if you're looking at the bronze standard high deductible plan as a way to sort of reduce some of that out-of-pocket expense and exposure to yourself.
And what's the deductible on the bronze plan?
Bronze is $4,100 for a single and $8,200 for a family.
Okay, and I'm glad you brought up families because one of the unique features with the accident plan is you can put your whole family on it. So unlike short-term disability, remember this came up earlier, with the accident plan, you can put your kids on it. It's one rate no matter how many kids you have. So if you have 6 kids, it's a better deal, okay? You can put your spouse on it, or you can put your whole family on the plan. Now, when we look at these bi-weekly rates here, you're looking at about $3 and change per week I like to put it in weekly terms. So you're talking about a cup of coffee a week to, essentially possibly protect your whole deductible against a serious accident. So that's why I think these plans are really, really a good fit. And again, a lot of the claims I see that come across my desk are for children. So I would encourage you, if you do have kids, this can really help protect you from that out-of-pocket exposure. Anyone have questions about how the accident plan works? Again, a really, really popular benefit, and you don't necessarily need to ride motorcycles or snowmobiles to need an accident plan. We all get in our car every day, and
How will it work for kids, like one of our employees, they have 2 kids, they went for an outing and got in an accident.
Mhm.
How will this plan work? Can you give a live example? Just for,
Yeah, sure. So you're saying if, let's say, an employee has a child,
Yeah.
and what was your example of what happened?
So let's say employee, they take them for an outing, something, and
Yep.
they get in and they fall, they slip, something happens.
Yep.
Good example is ski season is coming up.
Correct.
So if there is a ski accident, how will an employee's kid be covered under?
Great
accident
question,
policy?
great question. So children are covered the same as employees in terms of what your indemnity is. So the benefit that you see on your policy after you purchase the coverage, or when we're going through it and looking at the brochures, that's the same benefit that children are gonna get. So let's say you take your child to urgent care. You would receive the same $125 benefit as if you went to urgent care.
Right.
Let's say your child had a broken arm due to skiing and it required surgery. They would receive the same $1,700 benefit that you would if it occurred to you. So you can essentially get the same benefit if something happens to your child. And I've seen kids I had a claim last fall where a child fell off a swing, broke both of their arms, both of them. It required surgery, hospital admission. It was over a $6,000 indemnity. That really helped. The woman that filed the claim had a $5,000 deductible, and she didn't have enough money to cover that expense. She was paying $3 a week for an accident plan. So these plans work. And by the way, I've had one of these for over 4 years. I believe in it, and I've filed 3 claims since I had it. 2 were on my wife. So I really do believe in these policies.
Mohammed?
Oh, yes.
Oh, I also wanted to, if you can reiterate the fact that even if it's a work-related injury, they still get that.
Well, that's a great point, Mohammed, because there's no offset on this with workers' comp. And you have some risk at your occupation here. You're out in the field, you're working with people. This pays on the job as well as off the job. So if something happens to you while you're at work, you can file a claim just like you were off the job skiing on the weekend. So there's no exclusions here. It doesn't matter when the accident occurs, you can file a claim. So that's a key point. I'm glad you brought that up. Any other questions about the accident plan? Okay, great. I'm going to move on to the back of the page. These are your supplemental health benefits here. And we have a few different layers of protection. The first is a cancer plan. And I'm sure many of us have been touched by cancer, either through a family member or a friend. And not only is it a devastating emotional toll, but it can be a devastating financial toll. And more often than not, when you have cancer, you're most likely going to meet your full deductible and perhaps your out-of-pocket max. So this is a way to really help protect that out-of-pocket exposure. One of the best features of the cancer plan is it's got recurring benefits. So as you seek treatment, you continue to receive benefits. I've seen cancer diagnosis cases where I filed claims that were worth $15,000 to $20,000, depending on the severity of the cancer. So these plans can really, really help families in need. This is a composite rated plan, so what that means is you're going to pay the same rate regardless of what your age is, and it's guaranteed issue. So even if you're a little bit older, it doesn't matter, you're going to pay the same cost for this plan. And as you can see, the biweekly cost is $14, so it's a pretty inexpensive plan. Who signs up for this? I see a lot of folks that have had any family history of cancer that have been touched by it and feel that their likelihood for a cancer diagnosis is higher. That becomes, probably a good incentive to sign up for the cancer benefit. There's also wellness benefits that are attached to this. that incentivize you to just go in and do your regular physical. And this plan will pay you $100 just for going in and doing a physical. So that's an automatic kickback on your premium, which is kind of a nice feature.
But,
Mhm.
sorry, but again, this also coincides with pre-existing. You still gotta wait 12 months.
This has a different pre-existing condition limitation, and let me go over that with you. This has what's known as a 6-month pre-existing condition limitation. So these plans don't necessarily work as well when you've had cancer treatments 6 months prior to the coverage effective date. And, you know, unfortunately, if anyone who was diagnosed with cancer just signed up for a benefit like this, the insurance companies wouldn't be able to offer it, because they would just be paying out too much. It really works better if you haven't had a cancer diagnosis yet for future diagnoses. However, if you have been diagnosed with cancer and you haven't had any treatment, diagnosis, or taken any prescription medications 6 months prior to the coverage effective date, so let's say you had cancer a couple years ago and you've been in remission for 9 months, where you've had no treatment, no consultation, you're clear. Well, you would be covered under the plan at that point. So there is a pre-existing condition limitation just to keep the prices low, but it can work for people that have been diagnosed with cancer in the past. And I do have a lot of clients sign up for this who have had cancer in the past because they're worried about a recurrent diagnosis. And that's where this plan can work very well. Other questions about the cancer plan? Yes?
What if it were related to specific type of cancers? I know Aflac was specific as to not including melanomas. Is this across the board?
There is a skin cancer benefit, but it's a very minimal benefit. Most cancer plans work that way. Yeah. So it's typically a $500 benefit that you receive, and it's a one lump sum benefit. So that is one exclusion that we see with most cancer policies, including the Transamerica one that we're offering here. So that is a good question that comes up. I want to urge you, this is for invasive cancer. That's really what this plan is for. This plan is for when you're going through chemo, you're going through radiation, and your hospital bills are really racking up. That's what this plan is for. It's not necessarily for skin cancer, but there is a minimal skin cancer benefit attached to it. I saw that you had a question.
I do. Is there a waiting period on this one?
Well, the waiting, no, and it really associates more with the 6-month pre-existing condition limitation. That becomes sort of a waiting period, meaning if you've been diagnosed within that 6-month look-back period, then you would have to wait, 6 months. But you wouldn't necessarily be eligible for the benefits because you'd fall within that pre-existing condition limitation.
But otherwise, Ben, there's no waiting period like there is
No.
on short-term disability.
Yeah,
Correct,
because my
right.
Aflac, when I applied for it, it was a 30-day waiting period. My surgery was in May and I signed up
Yeah.
for the 1st of May, so because I didn't hit that 30-day window, I missed out. So I'm basically paying for a policy I can't use.
Right, and I see that a lot, and that's very unfortunate. I'm sorry to hear about that.
Yeah.
But those waiting periods can be tough, and they can cause a lot of exclusions in the claim process. And it's the same instance with the prior carrier had the giving birth limitation on the short-term disability, whereas even if you weren't diagnosed with the pregnancy prior to the policy inception, you still had a 9-month giving birth waiting period, which basically means you can't use the benefit. So we don't like those exclusions. That's why we went out and shopped this and tried to find something better with less exclusions.
Okay.
So, other questions about the cancer policy?
General question about these, especially the accident policy.
Yes.
And short-term disability. What is the portability of these policies? Because a lot of our employees go back and forth. They'll
Yeah.
go away, like they would stop working when they get something else, and
Right.
they'll come back in 2 months. So how does that work?
Great question. So all of the benefits are portable with the exception of short-term disability. Group short-term disability protects your income. When you cease employment, there is no income to protect anymore. So unfortunately, we can't offer this as a portable benefit for the short-term disability. However, when you come back to work, you're eligible all over again. So that is kind of a nice feature there. You're eligible to come back on a guaranteed issue basis even if you leave employment. So this plan is here to protect you while you're at work, but When you're not working, you're not receiving income, there's no income to protect, so we feel that portability isn't an important feature here. Now, on the accident and the cancer insurance, we feel a little bit differently on that. We feel that those are benefits people want to take with them. So those are fully portable. The accident, the critical illness, and the hospital plan that I'm about to go over.
And do they have to re-register when they come back and start working for us for the short-term disability?
They would, if they were, let's say they terminate their employment, they would have to go through the probationary period or the employee eligibility period again. But, again, they'd be eligible on a guaranteed issue basis. So that's kind of a nice feature. It means they'd be able to have the same underwriting offer as when the policy was first offered. Yes?
If you were taking family medical leave for a health condition for yourself, would you still be eligible for the short-term disability?
Well, you wouldn't be actively at work.
Correct, but you haven't left and you have not terminated your employment.
Correct. Unfortunately, you have to be what's considered as actively at work
Okay.
for the policy to continue. Actively at work is 30 hours a week or more, so unfortunately it wouldn't work with FMLA. Good question though. The last benefit that we have to offer is the hospital indemnity plan. I often call these sort of a gap filler style plan because they really cover a wide spectrum of occurrences and they fit really well with the major medical plan that we have here at TLC. So the hospital confinement benefit is really bulked up on this plan. We've given you a $2,000 hospital confinement benefit. So if you have an overnight hospitalization for any occurrence, including maternity, we have a lot of folks that use this for maternity, it's a lump sum $2,000 benefit. That benefit resets each year just like your major medical deductible. So it's not a one and done policy. You could use it year after year after year. So we really like that feature because it protects you whether it's an accident or an illness or even a maternity. You get that $2,000 lump sum benefit for hospitalization. We've also included a $100 daily benefit, and that's for catastrophic occurrences which result in long hospitalization stays. So as you can see, we have a $10,000 maximum on that, but you can see this could lead to a significant indemnity if you have a severe injury or an illness that leads to hospitalization. But the chief benefit really is that $2,000 upfront for any overnight hospitalization, maternity, accident, illness. So we really like that benefit. What we've also built in here is an outpatient surgical benefit. We've noticed that through healthcare reform that a lot of procedures are outpatient now as opposed to inpatient where you have an overnight hospitalization. So what we've done is added a $1,000 outpatient surgical benefit. And Saul, are there specific outpatient benefits with the major medical in terms of what they have to pay out of pocket, the outpatient co-pays and things like that?
No, again, the blue reward, the gold blue rewards plan, you'd be paying 100% until you met the deductible.
Mhm.
And for the bronze plan, the higher deductible plan, you'd be paying 100% till you met the deductible, and then 50% up until the out-of-pocket maximum.
Right.
So depending on where you were
Yep.
in the plan and your utilization, you could be paying 100% or 50% on that bronze plan for an outpatient service.
Gotcha. So that really makes sense here where we do have that $1,000 outpatient benefit where you can still utilize the benefit even if you're not staying overnight in the hospital, and that can really help towards your deductible here. So this plan is guaranteed issue and there's no pre-existing condition limitation. Now, I want to emphasize that. No pre-existing condition limitation on the hospitalization benefit here. So if you've been diagnosed with something even in the past couple of weeks and you sign up for this benefit and you need to go out for a surgery or you need to stay overnight in the hospital, you receive a benefit. I have had women sitting in front of me that are 7 months pregnant, sign up for this benefit, the policy starts a month later, they give birth, $2,000 benefit. So this is a really unique benefit that we have here. The prior carrier had a lot of exclusions with the hospitalization benefit, similar to some of the exclusions that you were discussing earlier with the 30-day waiting period, and there was also a pre-existing condition limitation on the hospital plan with the prior carrier. Mm-hmm. This is a group benefit. There's no pre-existing condition limitation. So that's really key, especially if anyone's had any adverse health history and you need a benefit that'll pay right away, this is the benefit for you.
Aflac had a cardiac problems, that would be covered under the hospital section?
Yeah, if you, let's say you had an overnight hospital stay because you had, let's say, a heart attack or a stroke, it would be covered just like any other illness.
Okay.
Yep, yep.
So it would be $2,000 for an overnight?
$2,000 for an overnight. Yep.
Okay.
Resets every year. Yep.
What is this down to the bottom? Trans-American applicants cannot be covered by Title XIX.
That's a good question. So that's a Title 19 plan. These plans aren't meant to work if anyone's on welfare or state benefits. And the reason why is typically then your insurance is covered. So if you were signing up for a plan like this, then you'd essentially be benefiting significantly from the plans. So that's really the only exclusion we have in terms of your eligibility is a Title 19 plan. So if you're on full welfare benefits, then these aren't necessarily a good fit.
Now, Medicare, is that a Title 19?
No, and you can certainly be on Medicare for this, not Medicaid.
Okay.
That would be a different situation. But for
Okay.
Medicare, yeah, we would have you just sign a form, just authorizing that you know that this is not a Medicare supplement plan because it's really a different category of benefits. So we'd have you authorize that. But in terms of how the benefits work, they work the same, just as if you weren't on Medicare.
Okay.
Yeah, so that's a good question. Other questions about the hospital plan or really any of the other benefits that we've presented here?
So I'll just wrap it up. Thank you, Ben.
Thank you.
I think some of these benefits are very helpful in terms of thinking about your overall healthcare and how you want to handle that. And certainly if you're considering a high deductible plan like the bronze plan, you'd want to think about filling some of the gaps in the out-of-pocket exposure of that plan with some of these lower cost voluntary benefits. So thank you for that. I just wanted to mention briefly, the premiums that you see on the summary sheet for the healthcare plans are in aggregate. So we haven't taken into consideration what the contribution will be from TLC. So there is a portion of the contribution that TLC will be kicking in, and Mohammed and Abi will be distributing that information to you fairly shortly, right?
Yep.
So just wanted to mention
So
that
they
these
make a difference.
the premiums, what would actually come out of your paycheck is not at the bottom of your sheets. Anybody have any questions on any of this stuff? And we're certainly happy to hang out for a little bit and be here if you want to talk individually too.
So when you sign this, does this all take effect in January if you agree to the sheet?
Both programs are gonna take effective in January. So, healthcare, health insurance, traditional health insurance that we talked about, January 1 effective date, as well as the voluntary benefits. So this is, consider this sort of the open enrollment period for both benefits.
So in other words, if I decide to go with this instead of Aflac, I just have to let them know that as of the first of the year, I would go with your plan instead of theirs.
And how would
Because I have
the
I have 3 of these plans already with Aflac.
Yep. Yep, so here's how it would work. We're gonna be here to conduct enrollments, okay, where you'd actually be able to sit down with a benefits representative and go over the plan. Effective January 1st, there's gonna be a payroll deduction change, is that correct, Mohammed? In terms of how the Aflac plans are payroll deducted. So what would happen is you would actually receive a portability notice from Aflac. So you would sign up for this, your payroll deductions would start for the new plans offered through Transamerica and Companion Life. Then Aflac would send you automatically a portability notice. At that time, you would have the option to continue your Aflac plans. So I want to stress that we're not taking anything away here. You have the option to port all of those Aflac plans on a bank draft basis. But if you choose not to, if you just want to replace your benefits, or I like to say enhance them, then all you need to do is sign up, and Aflac will send you the notice. You don't need to do anything with it. So
Okay.
your Aflac policies would be terminated.
Okay, so I don't need to contact them or anything? Just
You
that?
would not need to. No,
Okay,
you would not
good to
need
know.
But I mean, there may be certain Aflac benefits that you choose you wanna keep and pay for on yourself. I mean, that, I've seen it happen.
This works for me greatly, believe me.
Okay.
Yeah.
And the change in premium would then happen, depending, I think, when the enrollment form was received, and Avi and Mohammed could get that into the payroll system. So you would see the new benefits reflected in terms of payroll, you know, in the beginning of January. But the effective date would be January 1st.
So do we just hold on to these for now, or
Yeah,
do we
yeah.
give these to you?
Those are for you to review.
Okay.
And we'll be back to handle the enrollments. Yep,
Good.
Yep.
Thanks.
thank you.
Thanks, everybody, for your time.
Thank you.
Appreciate it.
Thank you.
When do you think you can do the actual enrollment? Because I'll
Yeah.
send out